Good morning, everybody. It's Tuesday, February 25th, 5:26 a.m. Central Time. Grain markets are lower again this morning. May corn futures down 3 3/4 at 493 1/4. May soybeans down 1 at 1046 1/2. May Chicago wheat down 6 1/4 at 587 1/4. May Kansas City wheat down 4 at 605 1/2. May spring wheat down 1/4 cent at 635 1/2. Markets sold off yesterday. Let's start there.
The nearby May 25 corn contract lost 8 cents per bushel and posted its lowest trade in 2 weeks. The nearby May 25 soybean contract lost 10 cents but remains within its recent trading range. Wheat futures dropped 10 to 12 cents per bushel. A drastic shift in Argentina's weather patterns likely had something to do with the sell off. Key corn and soybean areas saw rain over the weekend, while the forecast calls for substantial rainfall across 100% of the country's growing areas. In addition, the Trump administration is in the process of developing new restrictions on China's microchip industry.
Sometimes corrections happen because the market needs to correct, and sometimes there's a reason. I think the Argentina rainfall, and we'll get to some maps in a second, it's probably a good enough reason, but maybe the corn market had just gotten a little bit ahead of itself. There had been a sharp rally without really much of a correction for a long time. So to see a correction is, even in bull markets, corrections are healthy and necessary. You notice that soybeans the last couple days have held together better than corn. So we're seeing a little bit of a correction in like the corn soy spreads, which had really favored corn for a while. In the wheat market, I see it as being more of kind of a follower here than anything. I don't know if there's any big wheat story. Argentina caught a bunch of rain here over the last 4 or 5 days, specifically central and southern corn and soybean areas. And the forecast is incredibly wet. All of Argentina corn and soybean country will see more than double its normal rainfall over the next 2 weeks based on this morning's Euro model. This is a map from our friends at Crop Profit. So I think that's probably enough to cause a correction and a sell-off. Do we stick here? Do we find some footing? I don't know. We'll see what happens. But this was a nasty 2-day sell-off in corn and could turn into a third day here today.
Oversupply and a weak economy have caused China's pork consumption to stall. Before the pandemic, rising pork demand led to the expansion and modernization of hog farms. Since then, China's economic struggles have caused many people to cut back on pork consumption, which has created a surplus and suppressed prices. On Sunday, the government announced plans to oversee hog slaughter and regulate production capacity. Long term, if implemented, the reduction in hog production could suppress global soybean prices. China is the world's largest soybean importer, with roughly 70% of soybean consumption used for livestock feed.
This is not the sort of headline you'd like to see if you woke up this morning and you're thinking about planting corn and soybeans this spring. You've got a huge importer saying that, hey, we don't have much room to grow in terms of pork consumption. Therefore, our hog herd probably doesn't have much room to grow. Therefore, our feed demand probably doesn't have much room to grow. What does China feed its hogs? Soybean meal and corn. I threw together some supply charts. So China is sitting on, or is projected to be sitting on, roughly 46 million metric tons of soybeans at the end of the marketing year. That would equal 37% of all global ending stock. So they've got a lot of beans. They've got even more corn. China is sitting on supposedly 70% of all global ending stocks. That's the projection for the end of the marketing year. Tons of corn on hand. Same thing with wheat. China is projected to account for half of all global ending stocks of wheat. I threw this chart in here, and I think this is a way to visualize China's importance as an importer of soybeans in particular. So you notice the last several years, China soybean imports and Brazil soybean exports have been very similar, within 5-6 million metric tons of each other on an annual basis. Brazil is going to continue to expand soybean production and maybe exports. Therefore, if China doesn't continue to expand its imports along with Brazil's exports or production, that's something that could create an even greater imbalance in the global supply and demand situation. We've already got a situation where we're oversupplied. Ending stocks are going to be close to record large. Stocks to use ratio globally is supposed to be close to record large. If Brazil continues to expand production and Chinese demand just kind of falls flat here, that would be a big, big, big problem moving forward.
So, if you guys have not checked out our premium content, you sure need to do so. Can you tell me about some of our recent premium videos, Joe?
Lots of acreage talk recently. I did 2 videos on acreage, one on soybeans and one on corn. And in these videos, which were shorter videos for us, like they're 10 minutes long, I run through the balance sheets and actually run through and make changes to different supply and demand categories based on my thoughts on acreage yield, demand, all that sorts of stuff. We run through some different scenarios. Pete Meyer is going to be on today, and we'll probably get into this in a little bit greater detail. We've had some grain marketing for beginner type videos out recently. Futures versus HTAs is one of them. I included all of them in this morning's email. We also did put options for beginners, re-ownership for beginners. I'm not a big re-ownership guy, but we do have a video on it. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. There's no other fee. There's no other obligation. Nobody will try to sell you anything else. We just want to send you our info for $50 a month, and that's it. You'll never hear from us ever again, aside from getting the emails and the text messages if you want them. Takes about 30 seconds to sign up. We do Apple Pay, Google Pay, Cash App, credit card, whatever is easiest for you. Give that deal a shot this morning, guys.
Ag Rural reduced its forecast for Brazil's soybean crop. The well-followed private group estimates this season's crop at 168.2 million metric tons, down from its January estimate of 171. The reduction was due to dry conditions in the country's southern region. As of last Thursday, Brazilian farmers had harvested 39% of the soybean crop, a 16% increase from the prior week. During the same week last year, farmers had harvested 40% of the crop. Ag Rural also reported that as of last Thursday, 64% of Brazil's second corn crop had been planted, up a whopping 36% from the prior week, but still lagging behind the 73% recorded at the same time last year.
That's a noteworthy cut to the production estimate from Ag Rural. And it makes sense because they're citing, I believe, drought in the South. And if you look at the last 60 days of precipitation in Rio Grande do Sul, in Paraná, in some of these southern areas, they've seen like 50 to 60% of their normal rainfall in some of those areas. And these southern areas, that's a third of the crop in Brazil. So to see that downward revision, I guess, is maybe not shocking. Now, I suppose the question moving forward is this: do CONAB and USDA follow along, and do they make cuts? And does the trade perhaps pay more close attention to those cuts when and if they're realized? These estimates are always kind of moving around, and it feels like we've continually been in this range from like a maybe 167 on the low end to like a 173 on the upper end. Maybe it settles somewhere in the middle, or maybe they're closer to reality with this 168. I don't know that it's a material enough cut, however, to really have a big impact on the market.
President Trump stated on Monday that the 25% tariffs on Canadian and Mexican imports will proceed as scheduled next week. However, a U.S. official indicated that the details surrounding the tariffs are still being decided. The tariffs were originally set to start in early February, but were delayed to give both countries more time to better secure their borders. Trump's reciprocal tariffs, tailored to each trading partner, are still set to take effect in April. Tariffs on steel and aluminum are set to take effect in March. And then, as we can all remember, early in February, Trump imposed a 10% tariff on Chinese imports.
Sounds to me like he's pushing again for negotiation. We still haven't, as it relates to our crowd here, the big concern would be that one, Mexico says something about corn with their retaliation because they've been our largest corn buyer, or China says something about soybeans with regard to retaliation because they've been our largest soybean buyer. And we haven't heard either of those things yet. And that's been a fear of mine continually since Trump was elected, essentially. We haven't seen that yet. I hope we don't see that, but it's something that we need to pay attention to.
Mexico could implement tariffs on China. The country is considering this approach while it works with the U.S. to secure a deal to avoid the 25% tariff threatened by Trump. Trump provided the suggestion while meeting with a group of Mexican officials this week in Washington. In the past, Mexico has imposed tariffs on countries without free trade agreements. Trump has demanded Mexico and Canada to take a stronger action against migrants and fentanyl entering the U.S. or face 25% tariffs starting here in March.
So that doesn't sound to me like Mexico wants to retaliate. That sounds to me like Mexico wants to work with us. Is that
Definitely? Yeah, they want to work with us and they want to avoid this tariff. They'll do anything, I feel like, to avoid this tariff.
As do we, because we need that export business. The export business, the corn export business to Mexico, is a big part of the reason that the corn market has been able to do what it's done. They've bought and have imported a lot more corn than what most people thought.
U.S. corn shipments declined last week. USDA reported that 45 million bushels of corn were inspected for export during the week ending February 20th. The print was down 30% compared to the previous week and down 12% versus the same week last year. Soybean shipments were near the upper end of pre report expectations at 32 million bushels. The print was up 18% from the prior week, but down 19% compared to the same week last year. Wheat shipments were reported at 14 million bushels. The print was up 50% from the previous week, but down 22% versus the same week last year.
We're kind of at the beginning of primetime corn shipping season for U.S. exporters, and we actually started a little bit early this year. Soybean shipments actually still pretty good. When it comes to competitiveness at current market prices, U.S. soybeans are not competitive versus Brazil. Brazil is much cheaper than what we can offer out of the U.S. Gulf. U.S. corn remains competitive on the export market and will remain that way until at least until Brazil's second corn crop is available for export. And a lot of that, the pricing will depend on how good is that corn crop and what does the export pricing look like post harvest. What did cattle do yesterday?
Cattle futures were up big. Live cattle were a $1.07 to 165 higher. Feeders saw gains ranging from 372 to 447. Box beef prices bounced back. Choice was up 296 at 313.73. Select was up 141 at 303.97.
And this was because of the cattle on feed report or just because?
Oh gosh, I don't think the cattle on feed report was bullish enough for us
No.
to see these big gains. So probably just because fundamentals.
When you're at prices this high, this sort of volatility is just par for the course, I think.
Right.
Outside markets, U.S. dollars about flat. Stocks are off a little bit. Bonds are up. Crude oil is about flat at 70.68 in the April WTI. Have a great day, guys. We'll be back on Wednesday.